Good day, ma'am. Good day, everyone. My name is Rechell Cinas, and for the subject legal aspects in tourism and hospitality, I will tackle about insurance law, chapter 14. For the objectives, we have to enumerate items that can be insured by a tourism establishment, to identify the rationale behind the concept of insurance, then explain the different kinds of insurance, identify the advantages and disadvantages of having insurance. Now for the introduction, insurance is very useful for companies engaged in the tourism industry because there are many kinds of risks and enterprises where investment oftentimes is quite substantial. By way of example, an employer may subscribe to a group insurance of his employees as part of its employee benefit program. Companies utilizing building structures for the operation of their hotels, restaurants, and other tourism-related establishments may think of investing in property insurance against fire or earthquake to protect their investments. Lastly, an investment in marine insurance, the usual practice among companies engaged in the transportation of cargoes at seas, may also be worth looking at. So when we say insurance, so again, it is crucial for business in the tourism industry due to the significant investment and the various risks involved. Companies can protect their investments by subscribing to group insurance for employees, property insurance for buildings, and marine insurance for cargo transportation. These contracts are governed by the insurance law, PD 612, now PD 1460, with the Civil Code of the Philippines applying where the insurance law is deficient. The definition and concept section 2. A contract of insurance is an agreement whereby one undertakes for a consideration to indemnify another against loss, damage, or liability arising from unknown or contingent event. The essential elements of an insurance contract are A. Insurable interest. These are the insured must have a legitimate interest in the subject matter. Existence of risk. There must be a potential for loss. Then C. Assumption of such risk by the insurer. The insurer agrees to bear the risk. Then D. Said assumption. Being part of a general scheme to distribute actual losses among those bearing similar risks. The characteristic of an insurance contract are aleatory. Obligations depend on uncertain events. Then B. Contract of indemnity, exchange of value for value. Then C. One rules, consideration is given, premium payment. Then bilateral, both parties have obligations. Then A. Formal, requires a policy and premium payment. These parties in an insurance contract are A. Insurer, authorized entity providing insurance. Then B. Insured, holder of the policy with an insurable interest. Then C. Beneficiary, receives insurance proceeds as specified in the policy. Insurance contracts may refer to the following. We have A. Life insurance, an insurance on human lives and insurance appertaining thereto or connected therewith. Then B. Fire insurance, which includes loss by fire, lightning, windstorm, tornado, or earthquake and other allied risks, when such risks are covered by extension to fire insurance policies or under separate policies. In C. Marine insurance, a contract whereby one for a consideration agrees to indemnify another for the loss or damage on a certain interest subject to marine risks by certain perils of the sea or specified casualties during a voyage or fixed period. Then D. Personal accident insurance, an insurance which provides expenses or losses of income brought about by death or bodily injury arising from violent external, visible, and accidental means. Insurable interest in group insurance. Any persons related to another either by contract or commercial relation may lawfully procure insurance on the other's life. Thus, an employer may insure the life of the employee and vice versa. Group insurance allows employers and employees to insure each other's lives. It provides affordable coverage for employees and their families, fostering goodwill and employees' retention. Employees must be actively working and have completed a specified period of employment to claim benefits. Group insurance typically includes non-forfeiture clauses, except for term insurance. If an employee leaves the employer, they can convert the group insurance to a standard form within 1 month, except for term insurance. Then we have also insurable interest in property. In property insurance, it is important that insurable interest must exist when the insurance takes place, effect, and when the loss occurs. In marine insurance, the owner of a ship has in all cases an insurable interest in it even when it has been chartered by one who covenants to pay him. It involves of beneficiaries, Section 18, number, contract, or policy of insurance on property shall be enforceable except for the benefits of some person having an insurable interest in the property insured. Section 19, an interest in property insured must exist when the insurable takes effect and when the loss occurs but need not exist in the meantime. The interest in the life or health of a person insured must exist when the insurance takes effect but need not exist thereafter or when the loss occurs. Then, fire, marine, and third-party liability insurance. The phrase perils of the sea or perils of navigation includes only those casualties due to the unusual violence or extraordinary action of wind, wave, to other extraordinary causes connected with navigation, a loss which in the ordinary course of events results from the natural and inevitable action of the sea, from the ordinary wear and tear of the ship, from the negligent failure of the ship owner to provide the vessel with property equipment to convey the cargo under ordinary conditions. Is not a peril of the sea, such a loss is rather due to what is called as perils of the ship. In such a case, the insurer does not undertake the insurer against perils of the ship. Then fire insurance, Section 167. As used in this code, the term fire insurance shall include insurance against loss by fire, lighting, windstorm, tornado, or earthquake, and other allied risks when such risks are covered by extension of fire insurance policies or under separate policies. Then we have compulsory motor vehicle liability insurance. So before registering a motor vehicle, the owner must obtain compulsory motor vehicle liability insurance or TPL. Claims for death or injury are paid without proving fault or negligence of up to 5,000 per person. Required documents include a police report, death certificate, medical report, and evidence of medical hospital reimbursement. Claims can only be made against one motor vehicle. In war risk insurance is an insurance covering damage caused by acts of war. It includes coverage for war, hijacking, and related perils. Insurers have intended to withdraw liability coverage for weapons of mass destruction or WMD, a subset of war risk insurance. WMD includes radioactive contamination, dirty bombs, electromagnetic pulse devices, chemical or biological weapons. Coverage was subsequently provided at full policy limits for passenger liability but limited to a maximum of $0 million for all third-party injury and property damage. So war risk insurance coverage varies between countries, with some like the United States providing coverage and others not. The International Air Transport Association argues that airlines in countries without coverage are at a competitive disadvantage. Under the Federal Aviation Administration program, U.S. airlines have insurance coverage for passenger and third-party liabilities at approximately $0.70 compared to a $3 outside the U.S. So in conclusion, insurance plays a crucial role in the tourism and hospitality industry by providing protection against various risks such as property damage, liability, and unexpected events. It ensures the sustainability of business by mitigating potential financial losses, thereby allowing them to focus on providing quality services to their customer. So that would be all for the chapter 14. Thank you and God bless.